Hey guys, thanks for stopping by, thetradinganalyst.com. This is Taylor. We're going to take a look at the market here. I'm going to go over sentiment. I'm going to go over charts. I'm going to go over some individual stocks that kind of make up the market. And the idea here is for after you watch this video, just to get a more clear picture of what's going on in the market. I take a very level-headed approach. I don't watch the news. I don't read media or anything like that. I think that honestly that by not doing that, and if you didn't do that, that your trading and investing and really your life in general would improve drastically. So that's why a lot of people have these opinions about the stock market that really have nothing to do with the actual stock market. So let's jump right into sentiment. Sentiment, you can see here, and this is just one sentiment reading. Here, this is the AAII Investor Sentiment Survey, and I'm going to discuss charts after this. I just wanted to start off with the sentiment. So this is the survey results for the week ending 7/15. So that was Thursday, I believe. And this is a few thousand, or maybe a lot more than that. I forget, but a lot of investors get polled each week on their sentiment. You can see the historical average is 38% for bullishness. And you can see right here, we're at 30.8, meaning we're, sorry, I had to pause the video because my kids came in the room, so I forget exactly where I left off, but we've got 30% bullish, which is 8% lower than the average, the historical average. So the reason I'm pointing this out is that a lot of people have been talking about this market like it's euphoric, and this would argue that it's not euphoric. For example, if the market was euphoric, you'd have probably 45% or 50% being bullish here. Okay, right now we're well below even the average. Okay, and then I want to go to the bearishness. People got more bearish this weekend with plus 2.7%, so 45% bearish. The historical average is 30%. So more people are bearish right now than they are on average. So people talk about this being a euphoric market, and I would disagree with that, and sentiment would disagree with that as well. So just to give you a kind of, most people know how sentiment works, but the way that it works is, when you use these sentiment readers, usually the people taking these surveys are wrong. So when everyone gets bullish, that's when you want to maybe look for a pullback, okay? When everyone gets bearish, that's when you want to look for the market to continue higher or to bounce, okay? So right now, more people are bearish than they are bullish. So that means sentiment is low. That means that more than likely the market will head higher. Again, sentiment is just one little aspect about this, but most of the time the market fools most of the people, okay? So right here, everyone's bearish. Well, not everyone, but more people are bearish than they are neutral and bullish. So most of the time these people are wrong, okay? So next I want to take a look at the charts. Now, we have this nice run overall, and I'm going to kind of zoom in here. But I want to kind of point out the last several times we've had similar dips in the market, okay? So this was right here in 2008, the beginning of 2008. We had a dip here. What did we do? We came up here, and this is the S&P 500. we dipped here, and then we had this nice big run up here. We came up pretty much right above the all-time highs, and then that's when we saw the next correction. Okay. Next time, and I'm going to remove this. Next time we had this big dip here. This was at the end of 2018. Right here, you saw this big dip, and then we ended up having this big bounce right here, and obviously we had dips here and there, similar to how we had over here and here. But what did we do? We kind of went up to about all-time highs. We broke it a little bit, and that's when we saw the next correction. So the reason that I'm bringing that up is that each of these last few times we went up to all-time highs, broke it a little bit, and then that's when we saw the next correction. So what do we have here? Here's the all-time high for the S&P 500. And you can see that is quite a bit away from us. Okay, so you might be saying, well, why should we do that this time? Why should we head to all-time highs just because we've headed to all-time highs the last two times we've seen a big correction in the market? Well, the market tends to repeat itself, and what I have noticed in my decade-long experience is that it tends to repeat itself over time in history, but particularly the more recent the examples are. Okay, so I find it very helpful to look at what has happened very recently. That has worked for me extremely well. Of course, I look back, 10 years, 20 years. I've developed strategies where I've looked back, 30 years in the market. But what I found particularly useful is that what's happened most recently is the best barometer for what's going to happen in the future. Obviously, it has to break that pattern eventually. It's not always the same exact, but your odds are higher by looking at what's happened recently. So that's that statistic. Okay. Now let's kind of zoom in right here. And the other thing that I want to mention, I'm going to go to the weekly chart right here, and I'm going to go like this. Okay, so this is the weekly chart where each candle represents 1 week of trading. Okay, very simple. Now, if you look at the weekly chart, we have been trading sideways for 7 weeks. Right here. 1, 2, 3, 4, 5, 6, 7. Okay, 7 weeks in this sideways trading range right here. Now, just this last week, okay, that ended a few days ago, we broke out of that sideways range. All right, now what does this mean? Well, one, it's another point that the market isn't euphoric, okay, because when you have sideways trading in the market, that's not euphoric. Okay, that is euphoric is straight up market, something like that. Okay, this is not a euphoric market. Again, we've been trading sideways. By trading sideways, you rest. Okay, so let me show you the last time this happened. Similarly, it was right here. Here was a sideways trading range right there. 1, 2, 3, 4, 5 weeks, and then we broke out of it right here. And you can see when we broke out of it, saw a big run, boom, 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 3 weeks in a row until we kind of rested right there. And by looking at the weekly chart, you really kind of slow things down, and it doesn't look as dramatic. Okay, because for example, if you look on the daily chart, okay, right here, a lot up and down. And it looks a little more dramatic, but you kind of clean it up when you look at the weekly chart. So I strongly suggest looking at the weekly chart, the monthly chart, as well as in addition to the daily chart. It'll really help give you a clear picture of what's going on in the market. Now the next thing that I kind of wanted to point out is I'm going to go back. This is going back a year. So this is August of 2000. Here, I'll move my face out of the way so you can see the date. So down here, this is August of 2019, all the way through October right here. Okay, so what happened right here is we had this sideways trading right there, boom, sideways trading, boom, boom, boom. We broke out of it and then really just kind of traded sideways right here and then dipped a little bit and then we bounced. So this could potentially be what happens this time. So the point I'm making is that, you know, if you watch this video and it takes this dip right here, like we did right there, that doesn't mean the world is ending. Okay, sometimes we just need to chop around a little bit more. But ultimately, I do think that we will head higher. It's just a matter of how it happens. We could, you know, start heading higher from here, or we could need to chop around a little bit and trade sideways, and maybe even take another little dip, kind of like how we did over here, before heading higher. That remains to be seen. But regardless, you know, the market is strong. And the other thing that I want to point out is that in addition to, you know, the reason that I'm very bullish on the market is not just because I look at this S&P 500 chart and that's it. No. I do scans every single day. Every single day. I do scans that pops up stocks, okay? And these are stocks that are over 5 billion market cap. And this is just from Friday. From Friday, I've got about, you know, something like 40 stocks on that scan, okay? So I get about that amount on my scan every single day. So I have a really, really good picture because I'm not just looking at that symbol. I'm going through the chart of each of them, okay? And I can tell you from doing this scan every day, so meaning on Friday I saw 40 stocks. On Thursday I saw 40 stocks. Okay, so 40 times 5 is 200. So I'm seeing about 200 different stocks. Most are in the NASDAQ, some are in the S&P 500 and the Dow. But I'm seeing hundreds of stocks every single week. So I get a really good picture of what's going on in the market. And I can tell you that just on Friday alone, I saw so many stocks breaking out. I had to be very picky about which stocks I bought from that scan. So I can tell you the market is very healthy. And I can tell you that, you know, when I was running this scan back here, okay, back here, and I can tell you that the scan really started to dry up in January. Okay, this is the beginning of January right here, right? And as you recall, February is when what is this? Yeah, February 24th is when the market took that big dip. So the months leading up to this, the scan that I do, which is a very simple scan, high volume scan, dried up for bullish setups. I wasn't seeing a lot. In addition to that is I started seeing at the very end here, right there, I started seeing a lot more bearish setup or short setups, okay? And now I didn't predict this huge drop or anything like this. I didn't short the market right here, and I didn't take a lot of short positions right here before the market dropped. So I'm not trying to say that, you know, I had this crystal ball of predicting this big drop, but there were signs, okay? There were signs that the market was drying up. Of course, no one can predict this, you know, huge, like 35-40% drop in a few weeks. I certainly didn't. I'm not going to pretend that I did. I did make money on the way down after I kind of saw what was happening, because when I run my scan, I see that, okay, like now, everything is breaking out, okay? Everything is breaking out, whereas right here, everything was dumping. Okay, everything was dumping. My scan was hit with a huge amount. I mean, I'm getting like 40 stocks on my scan right now. Back here, I was getting like 100 to 200 a day on my, on my scan for heavy volume plays, really for the a couple of months right here. So my point is when you look at a lot of stocks every day, you get a really good pulse of what's going on in the market. So that's what I'm seeing in the market. So let's kind of look at a couple of individual stocks. So there's Apple right here. Okay, obviously a big, huge run. And I'm just going to kind of zoom in here. Remove these lines. So the reason I'm going to discuss these stocks is just to go over the market typically moves with these stocks. Apple, Microsoft, Amazon, Facebook, Tesla now, Google, am I missing any? Netflix somewhat. But anyway, so the market moves with these stocks. So if these stocks are still healthy and in uptrends, it's a lot harder for the market to head lower. Okay, so right now we've got, I'm not saying get long Apple here, but I am just saying that Apple is still in a very nice trend. We're only a few bucks from all-time highs. All right, looking at Google, same thing. In Google, right here, we just broke over this big-time resistance. All right, big-time resistance, we just broke over it. Right now, basically just sideways trading. Okay, nothing bearish about this. Okay, the trend is still very much so in the upward direction. We haven't had any huge reversal candles or anything like that. Microsoft saw a little bit of a dip, but the trend here is still very much in the upward direction. We're making higher highs and higher lows. Very healthy action. Facebook, very similar action to Google. We broke over this resistance right here, and now we're just kind of hovering above it. Okay, Facebook, very bullish. Tesla, same thing here. Trended higher, and now we've just been resting right here. Right, resting. Again, this isn't some trade idea for Tesla to go long right here or anything like that. Just kind of going over the broad picture of the market, because these are market movers, and as you can see, it's holding up very well. Let's see, Apple, Amazon. Amazon is the next one. I'm going to go over, again, a slight decline right here, but still on a very, very big uptrend. All right, very, very big. This is a higher high. This is a higher low compared to the most recent low. Very healthy action. Same thing that we saw over here. See a little mini dip right here, and then we just kind of head higher after that. So again, nothing from these major movers in the market that is of concern. Okay, so that's another thing to take note of for the bullish case of the market. So those are my thoughts on the market, and right now what I'm showing you is the portfolio tracker, which tracks all of the closed out alerts that we've alerted to subscribers here at thetradinganalyst.com. All of these alerts are sent out in real time via text message to our subscribers. This entry posted in real time or texted out in real time, the exit exited in real time, and you can see here the vast majority of these trades are winners, and you can see the losers are much smaller in relation to the losers. You can see here the average win is 50%, the average loss is 32%. So our wins are much greater than our losses, and that is how you remain profitable. It's not by being perfect, it's just by winning more than you lose. All of these trades, well, most of these trades are for options. You can see that we've got about two of the last about 20 trades, so about 10% of our trades are for common stocks. The rest are for options. For those of you that don't trade options, that's okay too, because you can trade these stocks of the options we trade. So for example, if we alert Roku calls, then you can just buy Roku the stock and buy and sell when we alert those entries and exits. It's very simple, and that's what a lot of our members do. The other thing that I want to mention too is that all of these trades are swing trades. All right, you can see here, this is the this column right here shows you the average, or not the average, but the length of time that these trades took place. And you can see the shortest distance is 5 days. Here's 41 days, 22 days. Okay, you can see that for yourself right here. 11, 26, 22. So all of these trades are swing trades, meaning you don't have to be sitting in front of your computer all day trading or anything like that. These are swing trades that last an average of, right here, you can see 15 days is the average length of time that, so 2 weeks is how long our average trade lasts. So if you've got a full-time job or a part-time job, this is something that you can easily participate in and make money. So I encourage you to sign up and join. You can start receiving these alerts right away. Now, I also have another service that I'd like to bring to your attention as well. So right here I have the alert service. It's very profitable, but for those of you with larger accounts and maybe you want to be hands-off, I also manage money for people. Okay, so I'll show you the results of that. So here are the returns from the accounts that I manage. Kind of blocking off the, well, I guess it's that way, the left-hand side of the screen, because it lists my clients' names, and for privacy reasons, I'm not going to show you their names, obviously. And if you are a client, I won't show your name as well. So this is how it works. I have separately managed accounts. So I have a master account, and then I have all these individual little client accounts where they have their own account that I have permission to trade. When I place a trade in the master account, it sends out the same exact trade in all of my client accounts. So all of these clients that I trade for, they all take the same trades. The reason that the returns that you can see over here on the right hand side of your screen are varied is because they have joined me and my services to have me manage their money at different periods of time. So not everybody signs up at the same time, so they're not all going to have the same amount of returns. So that is why they have varied returns. So as you can see, returns are as high as almost 65%, almost 65% for people who have, oh, and here's one who's been with me the longest, 69% right here. And this is, sorry, I should have clarified that the time length that this is 1 year. So we actually just had our 1 year anniversary on Monday of last week. So just a week ago, we had our 1 year anniversary of when I started to manage money for people. So these returns are over the course of 1 year. All right. So again, 69% in the course of 1 year. I do take fees for managing funds, and I get a percentage of profits. So it's in both of our interests to have the accounts be profitable and grow, because I'm making money when you make money. So yeah, that's it. As far as that is concerned, you can contact me about that. So again, I have two services. I have the alert services where we just text you some trades, and the trades, I will say that the alert service is completely separate from the managed account. So they're not taking the same trades. I don't take options trades for the accounts that I manage. That's one big example. And I take a lot fewer trades here for the accounts that I manage money. So if you're interested in that, please let me know. And if you have any questions, I'll be happy to answer them as well. But what you want to focus on is, 69% for the person who was with me the longest for a year, and that's in a year's time. And as you can see, the accounts have been rising, not the accounts, but the returns have been rising and rising and rising, and are now at their peak. Not that it's going to go down from here, but just at the peak so far. So we've done quite well, and I'm confident that we'll continue to do well, particularly because we did see a pretty turbulent time in this last year. Most funds are that are out there are not able to return, 69% for their clients in a year's time ever, let alone during this last year. Just for example, the market, the S&P 500 is up something like 10% or less right now in 2020, and obviously we're beating that by a long shot. So when you compare that to the benchmark of the S&P 500, as well as compare it to the returns of even the best funds out there, we're doing extremely well. So yeah, let me know if you have any questions. I hope you found this video useful, and good luck this week and for the rest of the year. See you next time.